Yeah, there we go. So if anybody would like a copy of the recording, can send it out after as well. And you're welcome to forward that to other people too, which should answer quite a few questions. So with all the fuss in the media about NDIS, typically, from what I see, it's one particular group of people that rip off the Australian taxpayer over and over and over again. And the vast majority of them seem to live in Western Sydney. So you can sort of narrow down what group it might be. And I'm travelling at the moment, so I don't get to see the Australian news very regularly at all. And, most of it's all just doom and gloom anyway. So if I'm thinking about the question and the fuss about people ripping off the NDIS, it doesn't last. It doesn't last very long at all. And the good old Labor Party's got a real bee in their bonnet about people ripping off disabled people, as they should, and they definitely take steps to make sure that it doesn't happen. So the NDIS providers, the SDA providers, everybody involved are regularly audited. It's really people that should be enrolled as robust participants, with mental issues, if they think that they can constantly rip off the taxpayer or make millions of dollars and get away with it. Doesn't happen at all. You can make a little bit of money for a short period of time, but it's just not going to last. And there's so much money in the NDIS, it's sort of a pointless exercise trying to do anything illegal, dishonest anyway. There's just so much money to be made, and every year it increases. So unfortunately, there are stupid people that try and rip off our wonderful systems, no matter what those systems might be. And the good thing about NDIS when it got going during COVID was that the government just paid the money to people that said that they needed it, and then it audited it all later and checked things later, which they're doing. So they did very well, and they continue to do well with the NDIS. The other thing that I've seen about complaints about NDIS is the terrible housing in which people live. And that's exactly what me, Gary, Lawrence are telling most people, is that people are living in awful conditions. We've got parents trying to get children into a bath that they can't get the wheelchair in, they can't lift them into the bath, they can't, even if they get them into the bath, they can't get them out of the bath, things like that, which makes day-to-day living exceptionally difficult and traumatic and stressful. So we're actually solving that problem of providing custom-built housing for these people and improving their quality of life. So, Gary, was there anything in particular that had been in the press that you wanted me to address?
I think largely what I've been talking about with my clients has been that there are issues with the NDIS, obviously, but one of the big areas where the NDIS can save money is by this housing scheme, right? Taking people out of very, very expensive institution type care and into houses with a carer, as it's actually saving the government a lot of money. So, yeah.
Correct. So, and once you understand the figures and how much money the government saves, it's very easy to see that it's not too good to be true at all. So because that was coming up all the time, I did just a quick and dirty spreadsheet. Gary, can you see a spreadsheet on the screen at the moment? Should be sharing a spreadsheet. or anybody else can tell me if they've got a spreadsheet.
Yes, I've got the spreadsheet.
Yeah, okay. All right. So if we just have a look at that, this will pretty much answer the question. And when you think how much money they make, which is got to be over $400,000 a year, and then what Gary was saying, how much they save, which is over $750,000 a year, the government's better off by over $1 million, $1.2 million a year for every house that you build. So where do you get those figures from? If we're buying a house and land package, there's stamp duty on the land. There's GST on the cost of building the house with all the materials that are in there. Somebody had to put the house together, so there's about a year's worth of work for everybody involved. There's a bit more, but if the average income in Australia is 95,000 these days, then they're paying about 25,000 in tax. But then we're actually creating more than 10 full-time jobs because that house has been completed. So if you think that there's got to be at least, typically on the average houses, there'll be 2 participants in those houses. Each one of those participants requires 24-hour care. So that's 3 8-hour shifts. So we've got 2 participants, 3 8-hour shifts each. That's 6 people. Nobody's going to work 7 days a week. So you need another couple of people to cover weekends or days off. Then, so we're up to whatever that is, 8 people. Then, of course, you've got the bus drivers that take them to their activities. You've got the plan managers that look after their funding. And then you've got, all the physiotherapists, the doctors, the behavioural psychologists, everybody else involved. So there's another couple of jobs there. So if you think the amount of tax that all those people are paying, and there'll be some very well-paid people, and then there'll be some average-paid people, the government has to be making more than $200,000 a year out of PAYG, out of each house that we put together. Then, we're adding $150,000 worth of income at least to your income. So that's taxable. And you're going to be doing pretty well to get the taxable income and only pay $30,000 a year in tax. So it might be in some sort of company structure, other trust, etc., to help reduce it. And of course, if it was in your own name, then you'd be losing nearly half of that straight up after the cost of interest as well. So we know that there's tax from the rent that's being generated by that profit. And then, of course, you've got the NDIS provider or the SIL provider that is getting paid to look after the people with a disability. So very often I'm told that by a couple of them, they make about 40%, 50% on the income that they generate. So that's pretty good. It's not excessive at all. And even if it was, who cares? The valuable service that's being provided, and it all is generating money for lots of people. So, if they're making that gross profit and then they're paying their tax, we know that they're making, or they're paying at least they're probably paying a couple $100,000 for every house that they have under their control that they're renting from us. So if you added up all those sources of just taxes from the government's got over $400,000 in, and you're all excited because you were going to get $150,000 in your bank account. So now you might think, well, 150,000 is not enough if the government's making 3 times as much as what I am, and I'm funding it, putting in all the work, the paperwork, etc. So that's half your answer. However, Bill Shorten said it cost $14,000 a week to keep somebody in hospital. Other reports say it costs $20,000 a week, depending on who you look at. So whatever, pick a figure in the middle. Then if they're paying you $1,000 a room, $2,000 a room per person, then they're saving maybe around $15,000 a week at least. So $15,000 a week over the whole year, $700,000, $800,000 that they're saving from not having these people sitting in hospitals or aged care facilities or, you know, I shouldn't say Airbnbs, but there's plenty of them in Airbnbs and caravan parks that we deal with as well. So, and then of course, you've got to remember that in December last year, the Treasurer was having their budget review, and they said for every $1 that we spend on the NDIS, the economy receives $2.2. So it's something that they've actually been continually increasing rather than decreasing. And, you know, even if I'm 50% wrong, 100% wrong, the government's still making money. And not that that's the main issue or the priority of the NDIS, it's giving people a better quality of life. And when you're talking to the NDIS providers and the SIL providers, they don't care anything about us investors. They are just trying to provide the best quality life for the participants. Alrighty. I'm getting a few messages so that we just see it's related. Oh, okay. So I see that people have worked out the meeting code from the invitation. If Nyok could send the invitation again to Devang, that'd be nice as well. All right, so that's the answer to the first question. And in any investigation, just follow the money and a lot of things will all make sense once we've followed the money. The other question that we get a lot of the time is that it's too good to be true or, you know, prove it, okay? So what I was just doing at the start of the meeting was just downloading some reports that we have received from some of the houses that have been completed. So what I'll do is I'll just go and open up those and we'll just have a look and see what sort of income that we're getting. So I haven't had a look at these before. Let's have a look. Just give them a minute to open. And I'll share. Sorry guys, just got to get it to pop up. All right. I think we're opening up about 9 documents. That's just taking me a minute. And we want to be in sorry, internet's going a bit slow. That's not what we wanted. Let's have a look. Hang on, I'll just get rid of these. Sorry, guys. All right, so these ones, I might have just opened the wrong ones, but anyway, when we're dealing with the profit share arrangement, we're getting 40% of whatever the net profit might be. Sam, can you see basically a white page that says Encounter Bay and the calculators? or anybody that's on?
Yes.
Yeah, I can see that.
Yeah, okay. All right. So what happens with the profit share arrangement? That's where we're expecting over 200, around 250,000. We'd be expecting over that these days because rents have gone up this financial year. And the services that the providers get paid have gone up in some cases as well. So every 3 months. So we're only getting paid every 3 months. One is because of the paper warfare that's associated with that and the time and the expense. So the NDIS provider gets they don't have anything to do with calculating the income or the profit. It's subcontracted out to independent and different accountants who do the auditing of all the income that particular profit share house has generated for the quarter. They pay us after 2 months as well. Gives them a bit of time to do the calculations, get through it all, and keep some money in their bank and earn some interest, I suppose. So then we'll get a report like this that explains where the money came from, typically, what the expenses were, and how much we're going to get paid. So we'll notice that there's a couple of different accountants that they use. Might depend on the area or how busy the accountants are or how many staff they've got, but it's completely independent of the NDIS provider. Nothing to do with them. We don't have to believe a word that they say. And the quarterly, a lot of the information is wiped out here, and we're not allowed to email these things out. We can just have a look at them in the Zoom calls as well. So let's try and flip through and keep them without disclosing anybody's identity as to how much they're making. Otherwise, all their friends will be around for free drinks and holidays. So in the quarter, end of 2022, there was about $350,000 worth of income. Obviously, accountancy is always going to be an expense because they're the ones doing the quarterly reports, and there's a breakdown of what the expenses are. So we know that staff are always going to be the greatest expense because so this is all, remember, for the 40% profit share arrangement, this particular high income return. And if we've got a carer in that house, they probably are earning normal daily rates, $39 an hour or so. And in a lot of cases, that's twice as much as what they were earning before in previous jobs, so they're happy. But those people get invoiced to the NDIS at $59 an hour. So there's a $20 profit there per hour. And every day of the next 20 years, there's going to be people in that house that we're going to be making 40% of that hourly rate profit, after the other expenses apart from the staff. And when you also look at the what the services are, so there's a list of the staff that Cocoon have. See a purple list of services there. Stay, Gary? Hopefully. Yeah. All righty. Now, virtually all these people are PAYG with Cocoon. So Cocoon has many hundreds of staff, and I don't know what a physiotherapist earns, but if he's getting paid $100 an hour, then he's getting charged to the NDIS at a whole lot more than that. That's for sure. So we're making a percentage of that profit. Obviously, rent is an income that the house generates. So we're also making 40% of the profit on the rent as well. And all these incomes just go into one pot, and then the expenses associated with that house come out of that pot as well. And looking at, so that's where we were before. So the biggest expense is always the staff side of things. So that leaves us with nearly $160,000 worth of profit for the quarter. So 40% of that would be, what's that? The 10%, nearly 16,000. So times 4, 64,000. So a bit over $60,000 of that is the investors. Multiply that by the 4 quarters, and we're up to the $240,000 a year, roughly, of income. There's a bit more to it. We might owe GST. Sometimes there's no GST involved at all. We might owe, a third party, somebody that teaches art classes. They might invoice us only once a month as well. So we're getting the full breakdown of what's in the bank, apart from just what's going in and out as well. So that was one that was done by the calculators. Next one we can have a look on. All right, so this is done by a different accounting company or software program, however they've done it. New South Wales for the quarter. All right, so we can see that the services have generated over $400,000, and this accountant has separated rent. The previous accountant didn't tell us how much rent we were getting, so we can't really work out whether there's 1 or 2 people there. But before this financial year, $18,000 a quarter, $80,000 a year, probably tells us that there's 2 people living in this house. Because remember, a robust participant was only getting about $40,000 a year, and usually you could only have one of them in a house anyway, and so that's why there were no robust houses, or very, very, very few of them are getting built, certainly basically none by investors. The NDIS providers and the steel providers were building them to look after their own people. So maybe this has got 2 people in it. That would be a pretty fair guess. And with those 2 people, there's a higher cost of electricity than what there was before. That's about double. Don't know how they got an $18 entertainment expense, but maybe they got taken to the football and somebody didn't claim it or put it on the company business card. So all these things we can drill into with the accountant, and when you're the owner, it's your money, so you have the right to know exactly what all was going on with this place as well. There's always going to be cleaning and yard maintenance and things like that. Once again, biggest expense always has to do with the staff. So after we've generated our 440 something, and we've paid enormous amount of wages to stimulate the economy, $195,000 to distribute, so close enough to $80,000, $75,000 per quarter would go to the owner of that house. Then there's a bit more detail as well. So what's going where, what's owed, what's coming in, etc. So then we've got another example where this one's in South Australia, is it? Ooh, yep. Okay. Same accountant as before. So $381,000. And we can see that there's only $9,000 worth of rent for the quarter come in. So there's definitely only one badly behaved person living in this house. You know, if the government has spent $381,000 to look after them, they've got a few issues. And maybe bad luck for them, but they're obviously getting lots of help. So good luck for them and very, very good luck for us. So that quarter, there's $150,000 worth of net profit. 40% of that is to you as the investor. So there's another $60,000 there. And so these reports are available. Like I said, I can't email them out to everybody. And I've got a few more later ones as well, which, you know, we can do another Zoom call on and have a look at those if need be. So from the profit share arrangement, does that all make sense? Especially Michael? All right.
Yes.
Yeah, okay, good. And yeah, we'll have a look at some later versions as well. Was a little bit irrelevant, but because the figures come up about the same anyway, but some people wanted to see later, more up-to-date figures. Same old story. Doesn't matter what we tell them, they don't believe me, which is fair enough. You shouldn't believe a word I say, you know, which we'll touch on in the presentation as well. However, well, we've got Lawrence here. One thing about Lawrence is he's never afraid to say, I told you so. So, and me and Lawrence have been helping people invest for more than 20 years. So, and you know, Lawrence and I had a chat the other day about, you know, what we've been through in the last 20 years of investing in Australia, which has all led to the housing crisis. So obviously Lawrence and I did a terrible job, a really shitty job of being property investment salespeople. Because if we'd done our job and people didn't keep saying it's too good to be true, then, you know, we wouldn't have such a shortage of housing in Australia and 0% vacancy rates in some of the areas where we are. So if we have a bit of a look back in time to just prove to everybody where we are again, you know, we're staring at one of the best investment options in the world. I'm sitting in Cambodia at the moment. I'm wandering around looking at 5-star apartments for $100,000, you know. But by the time you take into account the income, the leverage from getting a loan, you're better off to get $1 million NDIS property than a $100,000, you know, apartment in the middle of Phnom Penh because of the immediate capital growth, huge cash flow. So it's impossible anywhere in the world to find some better investment than this, and I would challenge anybody to find it as well. So if we look back a few years, we had NRAS a long time ago, which was the National Rental Affordability Scheme. So, you know, you guys all look at this now and think, oh, what a joke. People were whinging about rent 20 years ago, 15 years ago. Gary would remember it as well. You know, people were whinging. So there's always people going to whinge and look at the negative side of things, which as an investor, you just got to look at the numbers. So those NRAS schemes, the government paid us an extra $100,000 over 10 years, which was an astronomical amount of money, because that was 10 grand a year, and the rent on the properties would have only been 10 grand a year back then. So that was a huge return. And obviously people have made enormous amount of money from whatever they bought 15, 20 years ago. House and land packages. I remember people telling me what a stupid idea it was to go and buy something in Melton or Brassel, or what a scummy place Ipswich was. And in those days, you know, people could have bought house and land packages on huge blocks of land, 800 square metres, 1,000 square metres, around $300,000 or less in any of those places. Now, if you have a look at Melton, where the hospital's going, we can't really get anything under $700,000. So it's doubled in value, which is wonderful, but you've also had an increase in rent, and the thing's been cash flow positive for a long time. Queensland, that's overtaken just about every other state except Victoria and New South Wales, and it's continuing to accelerate from capital growth up until the Olympics, when virtually every housing, or the average price in Queensland, is going to be over $1 million. South Australia, selling houses around South Australia for a while for people on a limited budget, and those houses were around the $300,000 mark. Even just before COVID, $320,000, you could buy a 3-bedroom house. Now try and buy any house for $300,000, and around Adelaide, we've nearly got a 0% vacancy rate as well. It's got the lowest vacancy rate of any capital city. The 2008, we were running around selling property in America, and fortunately, a lot of people thought it was a good idea, and it obviously turned out to be a wonderful idea. The highest exchange rate that any of my customers got was $1.07 when they were buying $40,000 houses in the US. So all those houses that we were recommending in certain areas are about the $120,000 mark now. Plus, the Australian dollar is probably 66, 65, 67, I don't know, nowadays. So they've nearly doubled their money just on the exchange rate, let alone the capital growth on the property. And the rent in America was the original attraction, where there was nothing less than 10% returns. And a lot of places around Memphis were getting around a 20% return from day one. So that's another one. Dual occupancy properties was something that we were running around and telling people to buy too. And I remember there were quite a few around Ipswich area under the $500,000 mark. Today I'm seeing exactly the same area and houses selling between 800 and $1 million. So the point of this "I told you so" exercise is that we're now telling you NDIS. All right. And there's nothing in that list that's been a cock-up or cost people money all the way through the last 20 years, because it is pretty simple. Bricks and mortar, cash flow, leverage, speak to the experts like your accountants, financial planners, and it's very, very, very difficult to go wrong. And even if you did go wrong in the first year or two, you know that time's going to fix it. But NDIS has been the most organised, structured, documented investment that we've ever been involved in. The others were all a bit of a leap of faith, but NDIS, the government has documented how wide the corridor has to be down to the last millimetre, and how much money you're going to get paid for the next 20 years, not taking into accounting inflation. So very, very, very difficult to cock it up. The people are managing to do it though, because there's plenty of houses getting built in areas where there's never going to be any demand. But that's why we've got things like leases from day one, where the NDIS providers have told us that they want the houses built. So very, very important. And of course, it's all limited because, we talked about before how many jobs every new house creates. So it's impossible for us to sell 200 houses, 300 houses, because there's not going to be the staff to come and wipe backsides, cut lunches, take people to the footy, even if we did build the houses. So from your point of view as being an investor, the sooner the better, hurry up, because also when the people move into these houses, they basically do not move out either. And another improvement over the last few years is that once upon a time, the theory was that the NDIS participants would have to get moved to aged care once they got to 65, but that is discriminating against somebody based on their age, so it's illegal. So now they're actually allowed to stay in the house. And you, as the owner of that house, will continue to get your NDIS rent indexed to inflation. So we're all hoping for huge inflation rates, unlike the rest of the population. You know, as long as they live in that house, and hence you'll also see some of the documentation comes through as a 40-year lease. So a little bit difficult to find anywhere else that's got a 40-year lease. Hong Kong doesn't even have a 40-year lease anymore. So it tells you also what a good investment this can be. After my little I told you so rant, are there any questions or any discussion on that?
There's a side point. New South Wales are bringing back the NRAS system.
Oh, really? Okay. All right. Well, there's more taxpayer money that's getting burned. So the only way to get that back is to invest. Okay. So I think most people have had an opportunity to invest at some stage, and I don't really feel sorry for anybody that whinges about cost of housing or investment, because they've had plenty of opportunity. Might be a bit harsh these days, but like we said, there's $100,000 apartments here getting an 8% guaranteed rental return for the next 3 years, and you only need a 30% deposit, and then the developer here will allow you to pay off the loan over 3.5 years interest-free. So there's always something that we can do. Devang is sitting in India working with Adani Corporation, and we've got $140,000 apartments there that loans are available for, and getting about a 5% return, similar to what the returns would be in Australia, but they're getting capital growth. So these days we might need to look a little bit further afield than just wonderful Australia with its 600,000 migrants last year that caused such a housing crisis. Well, they didn't cause it. It's obviously been coming for the last 20 years, as we've been saying. And so now, you know, it's on the news every second night as to housing crisis, housing crisis, housing crisis. So, yeah, Lawrence should have been on A Current Affair 20 years ago, just telling them to everybody to invest. Then we've put together a whole lot of the typical questions and answers, so I can send that out to people as well. Here, we've added some new builders in recent times as well, because there's a very limited amount of building that each builder can be doing. Gary sends this out to all his customers because he wants them to be able to sleep at night. So it's about 101 pages, I think, and it just proves to you don't need to believe a word I say. Every single thing is documented about the income that's generated. And then there's other documents for the specifications as well, which are similarly long and boring, that can put you to sleep. Should you not be able to sleep at night? But then again, if you're reading how much money you're going to get paid as an investor, it's probably going to keep you up with excitement, because you've just got to think about how the hell you're going to spend all that money. I have seen couples have massive arguments about how they were going to spend all this money. So it's a bit of a two-edged sword as well. Now, anybody want me to run through the presentation, the standard presentation that we typically do every week? All right, so I might just do it really, really quickly. It is available for you guys to have a look at. We always, and I've already said, 10 times, don't believe a word I say. Okay, that's the good thing about NDIS, everything's documented, but you do have to speak to a specialist mortgage broker. We're happy to pay for an accountant as well, who's an expert in high income and how to reduce the amount of tax that you pay and also protect your assets too. We don't use conveyancers, we use a lawyer because the lawyer actually works for you and will also, the lawyers that we have will actually read the lease. And we've had enormous issues with leases and NDIS, new NDIS providers, slanting the lease in their favour, whereas we obviously want it in our customers' favour. So we've had leases rewritten for our customers that use this particular lawyer. And, if you're in your 50s, you would really want to have a chat with a financial planner because all this income that we're talking about can be tax-free too, once you hit 60 and if you don't work full-time. We all know what the NDIS is these days. We know that both sides of politics love it. Unfortunately, there's an ever-increasing demand, and we see that all the time from the overcrowding, a lot of the negative press that you see, it's just because, there's 8 people living in a 3-bedroom house, so they're beating each other up with, the frustration of living in close quarters and having to share things and not being, fully 100% well or smart, whatever, as well. The COVID was really good for NDIS because it got all the people out of the nursing homes that shouldn't have been there. Younger people under 65 and all the people that were lying around in hospital waiting for a house, they got moved out. Unfortunately, there's a couple of thousand of them that have been moved back into the hospital already. And there's some hospitals there are 200 people just sleeping in a bed there, costing the government at least $14,000 a week while they wait for you investors to get off your backsides and build a few more NDIS-specific houses. So we always thought, being an election promise, it's just going to get turned off, but obviously not. We know that now and we know why. The estimates when it started, 28,000 people would require somewhere to live. Before we even got to COVID, there were over 120,000 people that needed somewhere to live. So good for us as investors that the demand is going up, bad for everybody else, of course. The big waste of time trying to work out what the capital growth of an area is and what the demand is based on the government figures, because the government figures are catch-22 anyway. You're not going to have an NDIS provider pay their staff to create a plan, being the plan manager or the guy that applies for the housing funding if there are no houses available. Okay, so we know that the figures that the government puts up as to how many people are waiting for a house in any particular area is way, way, way under what the real demand is in an area. And those people are not going to move to a different area because they're living with their family. Typically, they're living with friends. They're involved in, social groups, and I keep saying art classes and all these sort of things. But they're not going to move 100 kilometres away just because an investor wants to build something with cheaper land. So what we have to do is build where the participants want to live, and to work out where they want to live, we need to know where they are, and where they are is we can work that out by dealing with the NDIS providers, the SIL providers, carers, etc. So anything that we're talking to you about as a recommended property, we know that we've got people waiting to move into that property. Hence, we've got a lease already organised from the SDA provider who's officially the one that gives us the lease. But more importantly than that, with the SIL providers, NDIS providers, carers, they're the ones that actually look after the customer, and they can put that customer/participant into any house. So we're dealing with those people, and they're telling us where they need the houses built. Here, it's 180 degrees different to a normal everyday investment property where we just build it. At the end of the building process, we tell the local real estate agent that it's going to be ready in a couple of weeks and to get advertising. And once it's finished being built, they'll show a couple of people through. One of the houses, one of our customers finished in Laidley. They had 20 people show up for their first open for inspection, 20 families. So their rental crisis, as we've mentioned over and over again. That's with the normal house, but a lot different to an NDIS house. Once the NDIS house is finished, it would typically take us about 3 months to have the income come into our bank account, or maybe just a little bit longer than that as well, depending on what sort of a house. No guesswork is the point of my little story there. We've even got NDIS providers that are so desperate for houses and have so much demand that they will give you a rental guarantee. So even if there's nobody in the house, you'll still get enough money to make the repayments on the house. So you're getting a free house. Even if worst case scenario, it took 7 years, 10 years to double in value, you're still making $70,000, $80,000, $100,000 a year in capital growth at no cost. Another reason why very, very difficult to beat this as best investment in the world. So money's where the mouth is, guys. Those particular provider, they'll give you a 5-year lease, guaranteed rental return minimum, 2-participant house. You've got a guarantee of $1,200 a week, and if it's a 3-participant house, you've got a guarantee of $70,000 a year, so a bit more as well. Because I know a few people that have sort of got to retirement or not far off, and are just a little bit. They were still in the too good to be true category of thinking, but when they've seen the rental guarantee, at least they know they can sit on any beach they like. And have all their expenses covered come retirement time, because these things pay off quite quickly as well. We would always suggest that you pay off your own home first and funnel all that money through offset accounts, line of credits, or whatever your mortgage broker works out with you as being suitable. But the income that's being generated from these houses is typically paying off our customers' houses in 3 to 5 years. That would be 5 years at the most. A few of them have done or are doing 3 years. That the mortgage brokers can work that out for you. And you do need to use our mortgage brokers. We have options that are not available anywhere else. Are you all looking at 4 different types of houses as well? I've been flipping around between documents in the presentation. Gary, can you see the 4 categories of SDA housing? Yeah.
Yes, okay. I can, yes.
All right, thanks for that. You're my voice. Oops, just lost my train of thought. I forgot what I was saying, guys. Anyway, it was really, really, really important. Anyway, all right. So, that's what I was. All right. Very importantly, new finance option. Okay. In the past, we've needed about 35% of the value of the property to put it into our super fund. Nowadays, we may only need 25% of the value of the property. So what that means is getting the typical NDIS property these days into your super fund would have cost $300,000 to $350,000. Now, you would only need about $250,000 in your super to hopefully or should be able to buy that property. So if you only need $250,000 in super to buy a property that's generating $250,000 a year cash flow and making you or doubling in value in the first couple of years, it's very, 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 very worthwhile having a look at. So Gary, myself, Lawrence can explain that to you in a bit more detail, but it definitely opens up a lot of doors for people, and just one little property like that would just make retirement all done and dusted in one fell swoop. So there'll be an email blast on that come out shortly as well. We're just doing a few calculations and examples, but by the time I sit there, do the calculations, examples on a property, the bloody property's sold anyway. So, there's a very much limited opportunity with NDIS to be buying these properties. We know that the builders can't build too many because the NDIS providers won't let them, because the NDIS providers can't keep up with getting the staff to run them. And they also don't want the builders to overcommit and go broke like hundreds of builders did during COVID. The main builders that we use are only doing NDIS properties anyway, and they're only building limited amounts so that they don't overcommit. They get things done fast. On the speed side of things, it's taking just under 5 months to build the most popular sort of houses that we have. So that's really good. COVID's pretty much all done and dusted as far as we're concerned now, and things are flying along. These days you would be expecting income in your bank account about a year after saying, yes, I want to go ahead with this, which is a huge difference to how it's been previously. But yeah, things are very well organised and very moving ahead really well. There's not really any big issue these days. It's virtually impossible to buy a family house under $600,000. The average house price in Melbourne's is, 1.1, 1.2, something like that. These things are only 800 to $1 million, so it's cheaper than the average house. And of course, the income is 6-7 times what an average investment property would give you. And so there's no issue with the cost at all, because the valuations come in every time at what they've been purchased at, or even greater too. And if anybody been chatting with us for a while, we talked about it at Mildura a few years ago before COVID. Now those houses are finally coming to completion thanks to COVID, builders going bust, cost of materials going up, trying to get tradespeople out into regional areas, blah, blah, blah. But they're coming complete now. And what people paid under $850,000 for are valuing at $1.5 million. There you go again. Lawrence is right. You should listen to everything that he says. Or just rub his belly for good luck. So cost, not an issue. We used to think, oh God, it's going to cost twice as much to build it, but not an issue. And it's for a lot of people that can't afford a normal everyday investment property, they can actually afford a more expensive NDIS property because of the income that property is generating, which is therefore adding to their serviceability. 5 months to get these things typically built now. You've got to add before that 2 months to get it through council, and a month or two to get it through your finance and have all our paperwork done, and then 3 months to 5 months for the income to come in once it's completed. Now, our mortgage brokers will work out what you're going to need to fund that through to money hitting into your bank account, because the banks will very often want to see that money available, whether it's in your offset account, whether it's cash, before you get your loan approval. And a very rough rule of thumb would be if you had access to 20% of the value of the property, you're pretty much home and hosed. Finding participants completely irrelevant stress these days, because everything comes with a lease, and we only get a lease if there's participants waiting. The rent has gone up a lot since we did this particular presentation. It's doubled or tripled in some cases. We can still do the cash flow analysis for you. There's more proof of how much money people have made. When you look at this house, that was a $596,000 house, and we expected that we're going to be getting a rent of about $85,000 a year. They're now getting about $180,000 a year, and that house is worth $1.1 million. So that was done 2nd of September 2020. All right. So there we go. Proof that we were right again. Remember, we've got a few different NDIS providers that we deal with. We can have the guaranteed rental returns. You can have the profit share, or you can have the normal everyday and rent it out and get the rent. So the guaranteed rental properties, the minimum income that you would get there is $1,200 a week. The expected income is $139,000 a week. A year. And then you've got the build to rent, where the average income $160,000, $180,000, up to about $220,000. So most people are getting around the $180,000 mark there. And then you've got the profit share properties, which the income's around the $250,000 a year. So we've got a few options. Some people can't understand or still think it's too good to be true for the profit share. You are therefore a bit more like going into business with somebody, but there's independent auditing on all that, so there's no real, you don't have to trust anybody to do anything. And we've got those three main options, and all of them are looking for more investors and need more investments. The Cocoon NDIS provider, who's the biggest provider and looking after people with robust requirements, they want 1,000 houses. So if they only let us build 100 a year in each state, it's going to take us a while to get to what they actually need. And then, of course, there's other NDIS providers that have similar goals too, but very, very limited. Anyway, that's the quick run through of the standard presentation. So any questions that's left or prompted? All right. That is enough for you guys of staring. Say again?
Just get in and do it.
Yeah. All right, you're on echo. So, all right, thanks very much, guys. Anybody that wants to...
Thank you. Thanks, Joe.
All right, anytime. Cheers. Yep.
Thanks.